And how is the bourse going in Nairobi?
Well, it's still a bond market. Most people are looking at fixed income. At least we've seen that most of the market gets supported around the 3,000 mark. So we do expect equities to begin to see more activity as we go into the third quarter. We're expecting third quarter results to start flooding in now. And despite the fact that there will be a slowdown, we do know that the foreign investor has been doing a lot of bargain hunting on the market. The exciting news is that the central bank and the NSE have finally gone the next step towards the automated trading in bonds, which means that we are going to be soon having the automated trading system handling both government bonds as well as corporate bonds because of the KenGen public infrastructure bond offer, which was recently floated, which means we have now a deepening bond market, which is the good news that we are actually having at the moment.
How much of this is a sort of renaissance of the market up there? You know, this bond activity and the new infrastructure you're getting.
Well, the thing is, investors are becoming more sophisticated. They are beginning to realize the importance of having a bond element in their portfolios. The fact that the government recently reduced the minimum bond investment to 100,000 and 50,000 trading on the market is also a good thing because it made it reachable, or it made it accessible to the retail investor. I think the fact that investors have started to understand that stock cycles will affect them, stock cycles will always happen, and equities will be the main risky factor in such cycles. And the fact that there is less risk in bonds means that they're now beginning to understand that flight to capital is a very good thing to do. It is also beginning to dawn on them that having part of their portfolios in bonds is also helping their portfolios to mitigate the losses that are coming from the bearish period we've had over the last few months. But now that the equities market is regaining, we would expect some of them to begin shifting towards the equities market as well.
Samuel Gichohi, now hold on, I want to talk to you about the shilling in a second, but come back to the studio here. And Charles Okiahalam, what do you think? I saw you nodding your head about the bond activity. What's your view?
Yeah, you could see here, Chris, that I think that some of the players in the equity market are moving out of the equity market in Kenya into the bond market, or at least they're trying to balance the positions, as Samuel has just pointed out, which makes sense given it's been a drifting market, really, and in the current circumstances, you would expect that. One of the questions I wanted to pose to Samuel was the extent to which you feel, Samuel, that if there is an equity market rally of some sort, that there would still be activity in the bond market as we've seen. In other words, do you think that if the equities come back, that we would get the kind of responses on the bond market that we saw yesterday?
Our equities market is very retail oriented. The other thing is we are still waiting to see if the National Social Security Fund is going to be allowed to start trading in equities, because at the moment, as it stands, the Minister of Finance had asked them to put their money only in government bonds. Now, what we see is that the fact that there is that new impetus on the bond market, if there is a rally on the equities market, we do expect that the local investors will tend to be a bit more slower to come onto the equities market, seeing that they were the most hit by the downturn. But what we've seen is that the foreign investor, who seems to have some models that show them when to come into the market, are the ones really bargain hunting and are actually moving the equities market. The other thing is that the bond market has the QIIs, the large investors, which is the funds and the high net worth individuals. And so the thing is, the bond market will remain resilient, but may lose out a little bit to the equities market as investors start to look into equities as we go forward.
And Samuel, the predictions are that the shilling is going to hold steady for the rest of the week. What's your view on it?
We don't know exactly how the Safaricom bond, which is now at the moment being floated, will affect the shilling. We saw the KenGen bond brought in a lot of dollars into the country, and that did have some pressure on the dollar. But we do expect it to hold steady at the moment until we know exactly how much we are getting in terms of foreign investment in the Safaricom bond. If there is heavy foreign investment, then we do expect the shilling to gain.